to the financial stability report that has been brought out by the RBI just a while ago. The bank's bad assets are all set to rise. RBI in their latest financial stability report have said that the gross NPAs could be rising from the 9.3% level in September 2019 to 9.9% by September 2020. Well, they're saying that it could mostly be on account of the worsening macroeconomic scenario, fresh slippages and low credit offtake in the economy. Let me take it across to my colleague Neha Tyagi. She is, of course, joining us with the key takeaways from this report. Neha, take it across.
Well, the report is quite extensive, over 100 pages, but I will take you through some of the important points that are the headlines of the report. The first, of course, RBI reassures us that the Indian financial system remains stable despite the falling domestic growth. Risks are coming out of global and economic uncertainties. As far as demand goes, aggregate demand dropped to 4.5% in Q2 of FY20. As far as the current account deficit is concerned, RBI is of the view that is likely to be under control, reflecting muted energy price outlook. However, revenue shortfall amidst weaker private consumption and investment could challenge fiscal deficit going forward. Talking about private consumption and investment, RBI said that reviving consumption and investment remains a very critical challenge going forward. As far as credit growth is concerned, it remains subdued for all the banks. It at about 8.7% levels. However, for private sector banks alone, the credit growth is about 16.5%. So basically the stress is coming in from the PSUs. Capital adequacy ratios improved post recapitalization of public sector banks. GNP ratio remained unchanged at 9.3% between March and September. However, the bad loan ratio is expected to go up to 9.9% in 2020 because of macroeconomic challenges, because of increase in slippages, as well as declining credit growth. As far as the capital adequacy ratio is concerned, it is pegged at 14.1% by September 2020. Like I said, the gross NPAs are pegged at 9.9%, and the private gross NPAs for private bank is expected 4.2%, and gross NPAs for private sector public sector banks is expected to be at 13.2% by 2020. So like I said before, clearly the stress is coming in from the public sector banks.